Hello, I'm Peter Towers and I'm joined today by Paul Barnaby, and we're going to talk about current issues for accountants and businesses. How are you today, Paul?
Good morning, Peter. I'm indeed fine. Thank you. Thank you for asking me to join you this morning.
Yes, I thought it was an opportunity to talk about some of the issues that are affecting accountants and businesses out of this big problem we've got and the whole world's got in COVID-19 coronavirus. So how are you seeing this as a prescriptive accountant consultant and obviously the Australasian representative for Plan Guru, Paul?
Well, Peter, as you know, I do specialise in predictive accounting, but I think the whole impact of this COVID-19 crisis is just that. It's never been more important for businesses to focus on their future, and in particular to measure the effects of, in most cases, the downturn, but there are some examples of upturns, just to measure the results, because one thing it has certainly done is turned every business upside down and sideways all at the one time. So I think that's the issue. And as far as businesses are concerned looking forward, they've got to look at what is going to be the impact on their trading results. But it goes further than that. They've got to look at the whole impact of profit and loss, of balance sheet, and of associated cash flow.
Yes, there's a lot of things to do, isn't there? And I don't think it's advisable they don't think about this until the end of September.
Indeed not. In fact, we're rapidly hurtling towards the end of May now. March was a good time to start thinking about.
That's right.
March or April. And certainly from the discussions I've had with both business owners and advisors in recent weeks, they are very busy. They're very preoccupied with not only just their ordinary routine compliance work, but in most cases, of course, applications for assistance.
Yes, so obviously accountants have been busy looking at what clients are going to be eligible for JobKeeper, and JobKeeper registration can still be made through to the 31st of May. I understand that then relates to payments made in the month of April, as long as they were made by the 8th of May, but also would cover payments in May. But the tax office is saying that if you don't qualify in April or March, that you may qualify then in May or June, and then you can join the JobKeeper scheme. I'm a bit concerned from newspaper reports, the $130 billion budget figure's already been committed. So the government presumably is going to find some extra money. Accountants are also been looking at which of their clients might be eligible for apprenticeship and trainee subsidies. So they're the technical issues. And I know accountants, a lot of them are still flat out getting tax returns done for 2019. But I think there's another big challenge confronting them all, Paul, and that is what's going to happen to their business clients when this amnesty type period finishes at the end of September, because at this stage, no bank or other lender can take any action to recover monies that are owing, even if there's been defaults, because the government temporarily changed the Corporations Act and gave a 6 months delay reaction or notice period, which expires at the 30th of September. So my thoughts are that it's imperative that businesses should be getting budgets and cash flow forecasts done now through to December 2021, so they can see where they're going. Is that the sort of comments that you're getting from the marketplace, or is everyone still too busy?
Oh, there's a mixture of both really, Peter, but absolutely I agree with you. Now is the time to be focusing on that, because I have a personal view that I think our governments, both state and federal, have been extraordinarily generous in their approach to this. I mean, I was looking at a case study just the other day, whereas not only did this business qualify for the JobKeeper, so the wages were actually going to be paid, but they were deducting tax out of the wages for their employees, as you normally would, but that doesn't have to be paid to the government either. So it's a double whammy. And I think that's extraordinary. In this particular case study that I was looking at with a client of mine, the JobKeeper and the cash flow assistance was actually the saviour of the business, notwithstanding the downturn, because the business was already in a little bit of trouble. So I think what really needs to happen is a change of attitude. I mean, going back to my days in general practice, we often did budgets only when the bank insisted that one be proposed for the application.
Yeah.
That's the only time we did it. Well, how wrong was that? Because a budget is not something that you do once a year, even if it's not just for the bank, just to have a look at what's going to happen. It's got to be a living document that's used as a strategic planning tool, not just once a year, but once a month, as soon as the results come out. So that's the other opportunity I see for both businesses, but more particularly advisors, is to put that whole structure in place, that whole relationship with their businesses, to have not only prepare a budget, three-way budget, profit and loss balance sheet and cash flow, but also set up that routine once a month meeting to review, to compare the actuals as they come forward off the accounting system with that budget. And so the other concept that I'm a great passionate advocate of is the rolling forecast.
Yes.
Which is the constantly updated budget.
Yeah.
So we're constantly looking. And I think you're right. If a business today now puts in place plans to run their budgets and their review process right through to the end of 21, they're going to steal a march on their competition.
Yeah, yeah, obviously we're in agreement on that. The reason I'm really highlighting December 21 was because Kate Carnell, who's the Australian government's small business ombudsman, was quoted in the Financial Review on Monday, the 18th of May, as saying that she was urging banks to support businesses well beyond the hibernation period. That's obviously the 30th of September. As lenders prepare to check in at the end of June with borrowers who requested a repayment holiday. So the Commonwealth Bank and other banks have given some repayment holidays, but they want to review it in June apparently. But Carnell's saying that she thinks it could take until December 2021 to get through these problems. And she's fearful that banks' attitude is going to be very different come October 1 to what it is today. And unfortunately, I suspect she's going to be right. I've been monitoring the bank's preliminary results for the half year. And it's amazing how much they've been providing for doubtful debt. And I think it added to about 17 billion, the figures I saw. Wow. And I found an article in the Financial Review, which I can't put my hands on this morning, but I'm sure suggested that the figure should actually be 40 to 45 billion dollars. That's a lot of money.
Absolutely.
So I don't think businesses are going to get much joy out of knocking on their bank manager's door after the 1st of October, because the banks are going to say, we've already lent all this money. Therefore, I think the role for accountants at present, in conjunction with their business clients, is to be preparing budgets using your products, Plan Guru, through to the 3-in-1 approach, so it's all done properly and accurately, through to at least December 2021, so they can ascertain if the client is going to need a injection of money at some stage, and then try to get it now while the federal government 50% guaranteed loans, the coronavirus SME guarantee loan, are still available, because they definitely finish at the end of September, and any money that hasn't been lent to SMEs, and it's only available to businesses with turnovers under $50 million, what's not invested with the businesses has to be returned to the Reserve Bank. So that gives an opportunity for people to put some part of their financing in order.
Absolutely. I mean, even before the crisis was upon us, Peter, the banks had tightened considerably on their lending practices.
Yeah.
Almost to the extent that the only way you could persuade a bank to lend you money was if you didn't need it in the first place.
That's the old story, isn't it? We've been around a bit. We've heard those over the years.
Or the other light-hearted approach is that a bank lends you an umbrella on the condition that you give it back on the day it rains.
Yeah.
But levity aside, again, it just underscores that need to put the proper processes in place, and in particular, get those applications in plenty of time. Even if the business still doesn't really know what's coming out the other side of COVID-19. I mean, how do restaurants get on, for example, when they can only put 10 people in? It's just not going to work for some. So some of them might even trade even with partial easing of the, and then you compare states and territories. That same example in New Zealand, they're allowed 10 people at a table, not in the restaurant, but at one table. So it's all over the place, and it's very, very difficult.
That's obviously what's happened in the Northern Territory, 10 people at a table, because that's what Jeff Goodrich, our affiliate in Darwin, reported in a conversation like this I had with him on Monday. He dined out last Friday, 10 to a table. The Northern Territory government said if you invite people to lunch or dinner, they're your friends and colleagues, therefore they believe that complies with the spirit of the rules. So that's what was happening. And they then had social distancing for the other tables. So they were all 2 metres apart, but they were obviously allowed to have more than 10 people. The Northern Territorians have got a very practical view on life.
Absolutely.
And I think that's not a bad way to go.
But Peter, the other comment I would make is that again, when businesses and advisors are putting together these plans, they don't just look at the dollars in terms of history or what they think the dollars might be in the future. You've got to look at what drives the business or what is going to drive the business. How many people are going to be in the restaurant? What is going to be the average sale per head or per table? How many transactions is the trading business going to have? What is their stock level got to be in the new regime? Everything is different. Every aspect of the business is up for question. So again, I just underscore that point that when you're putting together budgets and cash flow forecasts, that you use drivers on almost a line-by-line basis. Now that might sound like a daunting task and a time-consuming task, but if you use the appropriate tools, which as you know I do, then it's not. You can do it in an appropriate time.
Yes, that's very important. In fact, what you just said, I think, has always been, should be the standard. But a lot of people didn't do that. They took last year's figures and added 5% or 10%.
Yep, that's right.
This year, because of what's happening, and in particular what's going to happen in a lot of areas because of the likelihood of very little international tourism turning up in Australia, that's going to be quite significant in some areas. So the budgets need to be thought through. But what I'd be urging accountants to do is to be making this a top priority now. Obviously, the client's got to agree because at the end of the day, the client's paying the fee, paying the bill. But it enables the accountants to be involved, I think, in a broader sense, which is what they've been doing for SMEs for the past 2 to 3 months. And that is acting as a chief financial officer and being more closely involved, not just a once or twice a year conversation, but an ongoing conversation. Probably weekly by video, a monthly review meeting. Again, it could be undertaken by Zoom if that suits the circumstances. But if not, a proper meeting with the leadership team to plan where the business is going.
That's right.
So there's a lot of work there to be done by accountants in getting these things sorted out. And what will be the outcome of all this, of course, is some businesses will be clearly identifying when they really look at where their customers are coming from and what the numbers might be from now on. They may need to try to look to borrow money. But one of the issues is going to be if the business wants to do a major project and it's going to cost more than $250,000, the coronavirus SME loans won't be enough because that's their upper limit. So accountants need to also be thinking about the opportunity for businesses to raise capital, whether it's under Section 708 of the Corporations Act or crowdsource funding, or even early stage innovation company if it's a new product or service. There are opportunities to finance, but it all needs planning. But then it all needs basically the same documents: budgets, cash flow forecasts, business plans, and a vision from the company or the business.
That's right. Yep.
Okay, well, Paul, that's given us a bit of an overview, I think, on where the market might be going. Unfortunately, for accountants who have been very busy, I think we're only at about half time at this stage. There's a lot more work to be done for a significant number of business clients if they're going to be able to survive when this very unreal period we're currently in, with the government handing out all this money to businesses, undoubtedly keeping some businesses afloat. That's all going to finish at the end of September, and planning for that needs to be done beforehand.
Yeah. And I'd perhaps finish up on a positive note. There are indications that there have been upturns out there as well as downturns.
Yeah, I've heard you talk about that, yeah.
And the example I heard just the other day is really interesting. A regional newsagent, of all things. Pubs and gambling closed down, restaurants closed down. Their across-the-counter sales were bigger than Christmas last year in April. Extra gambling with whatever they've got to offer these days. I'm not a gambler myself. But also books and magazines, whatever. Their sales just went through the roof. So again, you've got to plan for those, for upturns as well as downturns.
Hopefully people are buying books on how to budget and run their businesses.
Yeah, yes, indeed.
Okay, Paul, well, thank you very much for this opportunity to have this conversation with you today. Good luck with your business activities, and we'll talk again in the near future.
Thanks very much, Peter. I enjoyed it.
Okay, thanks, Paul. Bye-bye.